And we got no music. So I can't sing the halftime report lingo, so I will just say trade masters, trade masters, trade masters. I don't know. That's the best I could come up with on the fly. But welcome out tonight to Trade Masters. Happy to be with you. Listen, difficult markets always make my made week a little joyous when I get experienced coaches, different perspectives. Do they see what I'm seeing? Do they see other things that I'm not seeing? Where can I look to make those little adjustments? Dog days of August we're in. Dog days of August, really tough month seasonality wise. Historically, finding out that this August may be no different. But I'm happy to be with experienced coach Greg Money. And you were joking. You stole my joke before the show, Greg. Your down arrow is finally pointing down on a day where the market is down on Trade Masters. How are you doing tonight, Greg?
I'm doing all right, man. I'm doing, even with down arrows, I'm still good. So
yeah. And Cody looking so dapper, so regal with his backdrop. Just he looks like he's a young professor to share with us the brains of the world, to give us that perspective of youth yet wisdom all at once. Cody, how you doing tonight?
I'm doing fantastic. Thank you for that great intro, Mark.
Listen, I've been in good mood all week. Listen, markets go down, I'm a bull. I get excited about the possibilities. I've been sitting on a pile of cash. I got to do something with it. See if you guys can convince me to do something with it tonight. Greg, as a many-time champ, Cody's won this show before, but I want your three best picks. I don't care what they are tonight. I don't care if they're theta. I don't care if they're directional. I don't care if they're bearish. Give me your three best picks. And Greg, you get to decide who goes first.
Well, I brought jokes tonight. I don't know if Cody did, so I'm
Cody,
gonna let him
bring jokes.
I did not. I didn't have enough time to grab
Cody,
some jokes
you are
today.
required by round 2 to have jokes. All right.
Find jokes that quickly.
Yeah. Listen, I bet you they're funnier. Find him on the fly.
They're probably dirtier too.
Well, but you have an excuse. You say, "Hey, Mark told me if I joke, what do you want me to do?" Right? What do you want me to do? All right, Cody, give us a pick. Make me some money.
Let Cody
All right,
go first.
I'm going to start off, and actually, this is something that I kind of pointed out in the trade lounge this morning. If we look at the ETF for financial first, I like what we're seeing in the ETF, where it popped up, and we're getting a little bit of a pullback there. And I actually have it more of a zone where it's coming into that between that. I guess that would be the 20 and the 50, or the 20 and the 9 you have there, Greg.
Mm-hmm.
So I really like that it's kind of sitting in that zone. Now, it wasn't as big of a red candle as it was at the end of the day when I first looked at the financial markets, but I still like a lot of the patterns you're seeing from some of the banks. A lot of the banks have the similar pattern, and some of them actually broke out higher before they pulled back. So my pick is going to be Synchrony Financial. It's going to be SYF. So as you can see, I really like this pattern because it is one of the patterns I typically like to trade off of. So we had a breakout to all-time highs, and we're retracing back into that range that it kind of broke out of, right around $50. I also like the fact that $50 is a nice round number here on Synchrony Financial. So I think that if you look at today's high, that wick is right about the same point as those previous highs. So I think this makes an easy triggerable candidate that we can place our trigger right above today's high, which is also yesterday's high, and it's also above those previous highs. So very easy to trigger into this if we can get a movement back up from that breakout retracement. Now the means to do this could be any which way, because $50 is a reasonably priced stock, especially for some of the bank stocks that are in the hundreds, that you could actually do this as a straight stock play. Or if you were to do it and want to do it as a long call play, I'm okay with that as well. So if we were to look to do a possible long call on this, we would have to go out a little ways just because they haven't opened up the options yet. So we would have to go out 120 days, which I'm okay with because I actually like to go out further in time when I do a delta trade using a call option. And for this one, I'm going to buy right at that 50 because the stock closed today at 49.95. So if we get that move up, that 50 would be in the money. So depending on what I could get that 54 would really determine what my overall cost average is. So if you were to straight buy the stock on margin, 100 shares of it, then you're looking at roughly $2,500 to get into that trade. still, I think, or no, excuse me. Yeah, $2,500 to get into that trade. Whereas here, if you can get in around 400 or 450, a little bit cheaper, and your ROI is going to be roughly the same. And next is where I'm going to target after that is if it were to break, I'm looking right around a target of 54. And 54 just because kind of looking at how fast and how far it runs, but it can actually do more than that. So if you go out to the weekly chart for me, you can see the weeklies is that this company seems to be very well run post-pandemic, where it's just been up and up and up, and you can see that it also broke out of those weekly highs. So I think targeting on a move of 55 or 54 to 55 in that range is a nice first target area to look at, whether you do it with the stock or with the call itself. If you want to own the stock, again, this seems to be a very well run financial institution, and it pays a dividend. Those are all my reasons why I like this trade.
What do you think, Greg?
Yeah, I don't mind it. I looked at the financial sector as well. I do like the way the pullback's setting up. I don't know that it's ready for prime time just yet. We may have to see another candle, another day or something like that to get above where we need to get it, the entry as Cody put here. So
yeah, let's map this out, because I mean, and that's the hesitation. I like finance, especially if I break down all of the cyclical areas, which I'm kind of lumping together these days. I prefer finance above a lot of things. But I'm like, if that just shot up tomorrow, I wouldn't take that trigger. Like 2 down days, shoot back up. I'm sorry, I don't trust it. What about you, Greg? Like, what would you like to see as the ideal candlestick pattern over the next 2 to 4 sessions?
Yeah, well, so I'd love to see some sideways trim here. Let these moving averages catch up a little bit. Get this 9 to turn. It's turned down a little bit there. I'd like to see that flatten out like the other two have. And build up a little energy for a boost, because the only problem I really have with this trade is this resistance that could form on a double top, right? So if we got in above here, so that's 51.05, you get in above there, you've only got about $1 move there at best, right? The ATR on this bad boy is like $1.38. So that would be my only concern about that. So the way that I would offset that, and I'm sure Cody probably thought this way as well, is I would dip my toe in the water if it got above here and do a part position. Like if I were doing, 300 shares full position, I might do 100 once it gets in here, and then another 100 after it breaks, or another couple hundred after it breaks. I would leg into this because I don't have the exact risk reward that I really, really like, but I do love the setup of the trade. Like this thing is, as Cody pointed out on the weekly chart, this thing's pretty. Like, look at this channel. That's a beautiful channel, and it seems to just go to the bottom, go to the top, go to the bottom, go to the top. So we're at the top right now. Maybe we get a little bit more pullback. I'd love to see, like I said, a little bit of sideways just to give it a little more boost when it actually does fire off above here. That would be my only concern about the whole trade. But I do love the setup itself. I think the setup's fantastic.
Yeah, I would have had an easier case because it was a doji when I first found it. It was a doji, so it would have been so much better had it not dropped at the end of the day.
Right.
And everything dropped at the end of the day.
I was just saying, and that's the entire market.
Like, I don't care. You're good, you're bad. Is like, we're all dropping at the end of the day because algos were like, we're in charge right now. You guys can all have your chart, have fun later on. We're gonna party for the last little bit, right?
Yeah.
I mean, I like finance in general, especially in that part of the portfolio, the cyclically based. I'm overweight there in that part of the portfolio. If this was a deeper dip, I'd be much more excited about it. I guess that's one of the things, because as Greg pointed out, when you look at that weekly chart, those deeper dips have been where the play's been out. Breakouts and deeper dips. This breakout is actually the exception kind of to the rule. But it's not over yet, right? That could still hold that breakout channel. And I could say, Mark, you're a little premature there. Not a bad pick. Very curious. Definitely want to put it on watch list. Definitely gonna give it some consideration because it does tend to move, and it was outperforming heading into this pullback in finance overall. So have you found your joke? I gave enough time. I was yattering all about and around.
No, I did find a joke, but I got it pulled up. I'm looking at jokes right now.
All right, you go look at jokes. Greg, you make me some money over here. Round one.
All right. Well, I had an extraneous pick here, and I wasn't sure if I was going to use it today. But since Cody fired the first salvo in finance, I'm going to do the same thing. I like the pullback. I love the way this has been trending. It's one of the better sectors. We're right, on a precipice of a breakout on the ETF here. So for all the same reasons Cody likes the finance, and you as well, Mark, I also like the finance. I'm going to go a little off the reservation here a little bit, and I'm going to go to Goldman Sachs, which as a company I'm not thrilled about, but as a stock I love to trade it. So that's just my own
Well, just
personal
because they
problem.
have no morals and lie about everything they do and say, hey, we're downgrading this stock, and then they go start loading up on shares, and then
Yeah,
listen,
reminds me.
I say this all the time on my Facebook. The Zuck is evil, but he makes me money.
Yeah. Yeah, it just reminds me of every government I've ever seen in my life, so including the ones we have now. But anyway, so what I like here is the pattern. Okay, so again, big breakout here, which we saw 2 weeks ago, just a beautiful run. If you're able to catch this breakout, you made a pile here. You had a nice 20-point move in about five trading sessions, which was fantastic. Now we're getting this bear flag pattern here, pulling back. Do I know if this is going to stop here? No, I don't. I would actually not even be surprised to see another candle down here. As a matter of fact, a doji tomorrow would be absolutely fantastic for the trade that I'm about to throw at you. But also the trade that I'm about to throw at you, I really don't care what this does, and I'll explain. I'll explain further. But I just want to say for all the traders out there, new and old, we always want to wait for confirmation. I'm about to break that rule. In a moment, you'll see why I'm about to break that rule. I really like this. We're coming into a very solid level of support here. Had an old resistance level back here, had some support here. I fully expect this to hold support here. Plus, we've got our 20 daily MA there as well. So we've got all sorts of reasons for support. And then we add on to the trade that XLF is looking real good. One of the stronger sectors. We've got a lot of things all lined up for us. And now's where I get a little bit crazy. I could wait for my doji. I could wait for my confirmation candle. And believe me, that is the smart way to go. I'm going to go a little bit different here. And Mark will probably crucify me for this, but I still think it's warranted. So let me throw it at you and we'll see what happens. The way I want to play this here is a poor boy's covered call, or what we call a diagonal. The reason I like this is because I know that I can do a diagonal here, or like you said, poor boy's covered call, and I don't have to be perfectly right on when this turns around. All I got to do is be right that it does turn around. Okay, so it gives me a little bit of freedom, because this pattern hasn't finished doing what it's doing. Like I said, I would not be at all surprised to see it pull down. So
I call this the blind bet.
Pretty much the blind.
I call it. You have a support level. You're placing a blind bet on support.
That's right. I'm placing a blind bet on support. But as Mark knows, I'm all about hedging my bets as well. And the way I'm going to do that is I'm going to buy the October. I'm going to buy the 400. I'm going to buy the 400 call here. Okay, that price looks really, really expensive, and possibly it is for some folks. But bear with me here. So you're gonna spend $1,500 to get a hold of this 50 Delta October call option there. But then what I want to do is I want to go back and I want to sell some credit. That's what's going to make this a diagonal. So I'm using a different strike price and a different expiration. I want to have my cake and eat it too. Now I'm going to go all the way out to the 415 here. I'm going to sell this for a buck and change, buck and a half there. The reason I chose 415 is because they expect a $15 move plus or minus between now and August 27th. So 9 days, they're expecting a $15 move. So if this turns around, could it get up to 415? It absolutely could. Now, if we look at this trade from a analyze tab perspective, okay, this is what this trade looks like. Okay, now the way that I do diagonals is a little different, I think, than most people. Because I'm selling such short term, I know that even if I'm wrong, if I'm wrong on my blind bet here, I've got between now and October. So what's that? 1 week left in August, 4 in September, and 3. So I got about eight or 9 weeks left where I could sell credit to offset this big old debit. Okay, and that's where most people would look at this trade and get a little antsy. If it gets up to 415, if it did that at expiration, which is only 9 days from now, you're looking at making $1,000 here. If I'm making 1,000, risking 1,500, that's still a heck of an ROI. Now, of course, I'm not going to leave it like that. I would never, with this kind of debit, I would never not go into this without a stop loss. By the way, my stop loss for this trade, good here. I would want to get out somewhere around, say, the 385 mark here. I think if it gets below this this support level here, gets below that 20, I'd be happy to get out at 385, close the whole trade and take the loss. So at 385, I'd be risking around $450, and that's whether it's at expiration or not. Okay, so $450 to make a potential, 930, 950. That's a 2-to-1 there. So I'm pretty happy with that risk reward. Now, if this thing decides to go to the moon, you're still going to make some money. But the key to this is you've still got all of those rolls to do between now and October. So again, that blind bet, I'm hedging it on the fact that I can sell enough credit here to reduce this big old debit that we're going to have. This, like I said, this is pretty big, but overall, once you put your stop loss in there, you're going to trim this down to under $500.
Do the math for me. Stop loss. Just look at the risk graph. If I have a stop loss, go back to the chart. So, I mean, typically when I get below the 20, I go pure cash flow. I don't do anything that involves directional components. So if I go down and it drops to 385, what is my loss here?
So your loss is 450. So if I go to 385 on the risk graph here, your loss is 448.
All right. So risk reward works on this trade just fine.
100%.
All right. $1 million question. Why can't I just wait for a doji? This is the question, because it makes the whole thing make sense. Pullback, flag, break, blah, blah. Why can't I wait for a confirmation candle?
There's nothing saying you can't. There's nothing saying you can't. The risk reward parameters will change a little bit, but you're also getting that confirmation. So, like I said, if you're more conservative, then wait for the doji, wait for the confirmation candle. It's still going to be a good trade, but it's not going to give you the same kind of numbers that we have here. Will you get a 2-to-1? You probably get close to it, but I don't think you'll get the same, to be honest with you.
And one last thing, and then I get ready for your joke. The one thing I like about the structure of I like the pattern, especially with confirmation. We've seen this song and dance in the market before. Deep pullbacks, blah, 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 end of the world. And then we're seeing rebounds that who knows if this is the time. Maybe this is the time we go down and actually the 50 doesn't hold. You never know. Bet on trends until that occurs. But if it satisfies a key rule for me for poor boy covered call. So I buy, what was it, the 400?
Yeah.
And then and that cost me about 1,500. By the religious book for me rule is the strike price I sell in the short term has to represent the total amount. So the strike price plus how much I spent. So you 400 plus 15 is 415. That's what you were selling. Just in case, right? In case like things go to the moon over a 1 day, 2 period, I get in the money. I get I don't lose any money. I'll actually make money in that scenario. Might close it out early, but that's a good problem to have, right? That's a good problem to have. So that's a by the book rule for me. All right, 2 interesting picks from finance. I like the area though. I do. Greg, am I gonna like your joke?
All right, let's see. So a buddy of mine came to me the other day and he said, "How did you quit smoking?" I said, "Well, I decided to smoke only after sex."
That is a good joke. That is as clean a sex joke as you can ever have, actually.
Pretty much, yeah.
And as someone who has smoked a few times in my life, I can truly appreciate that on many levels. That's a good joke. Cody, you made me laugh. Make me money. I want to do both. I want to make math. I want to make money. That's what life and trading is all about. Good times. Seeing green in the account. What do you got for us in next pick, sir?
All right, so I'm going to stick with the delta, theta, and a wild. So I'm going to do my theta now. I'm going to go with MARA.
He's sucking up now.
Mm-hmm.
Like he's sucking up now. Mara's been my largest holding all year, so.
All right, well then I guess you're going to like this because maybe you can pick up a little bit more of this holding, because what we're going to do is we're going to sell a naked put at $20.
I am going to judge you harshly on this, because if you don't go through my Mara criteria, you're just going to get schooled here. So let's.
All right, well I hope I can then. So we're going to sell it down at $20, and I like looking for this particular type of setup when I'm looking for a naked put, because the trend right now is up. So it's had some stuff in the past, but it got down, but the overall trend is up. It kind of broke above it, hasn't kind of a pullback.
Now, is the trend up, or is it just a wild child that likes to do stuff?
See, because I see that channel that Greg just drew. Okay, so I see it moving upward. So I always like to sell my naked puts after a pullback of sorts, and we actually have this pullback coming right down to its 20, right? So the pullback down to the 20, it is below its 9, but if we're selling, and actually if you could throw a 200 on there for me, selling a $20 naked put is below the 200 period moving average of Mara.
All right, so I told you I'm going to grill you on this one. Why would I want to sell a naked put below the 200-day moving average?
You could go closer, but I like the fact that we had a double bottom, or at least 2 points where it tried to get below 20 in the past 4 months, that it failed to do so. It failed to drop below $20. So if you were looking, let's say this naked put were to start going towards $20, this would be one that you would let it get to 20 and you take ownership. That's why I said you might be adding to your overall holdings if it were to go down that far. If not, the 200 period moving average is actually at 25. So once we get to actually looking at the ROI, you could do a 25 naked put and get a better ROI. So what I'm looking at when I do the simulated trade and I'm selling 30 days out, selling at 20, is I'm looking at picking up around $37, and I'm putting up, at least on my account, I don't know, Greg's is not looking at his screen right now. You're having to put up a lot more than I'm only
welcome to Canada, buddy.
Well, and first of all, and I meant to mention this the last pick when you were talking about margin. I think in a market where there are legitimate concerns from a macro standpoint, if you are calculating on margin, you're making a mistake. I think you're still in a greedy mindset instead of a responsible mindset. So I like calculating it not on margin. I mean, what would the return be not on margin?
Not on margin. I think Greg just saw it at what? You had to put up 2,000 there, Greg?
Yeah, basically the price of the put, right?
The full price of the put. So $37 on the full price of the put is
1.85% around there.
Exactly. 1.8. That's exactly what it is. You use the calculator. So 2% ROI. Now a 2% ROI is still good.
That's fine in my book.
Still that's fantastic.
And that's the thing is that, like, I really wish, because people, it's one of my pet peeves is that people calculate based on margin as if, like, what, you're going to use every penny of margin at all times, and then how do you manage that? I mean, like, have you ever seen a downtrend before? And so I try to do the calculations unmargined, because if you do them unmargined and you're like, that's not a bad, I do that throughout the course of time, that's 24% return. That's pretty decent, right? That fits my criteria, and so, like, I know it's not as sexy, but if you do it unmargined, I think it's more responsible. Plus, you get some pretty good returns still,
Okay, so let's look at, well, at first, if you were to do it on margin, it's about a 14% return on investment. But if we're not going to do that, let's look at what we get if we sold the 25, which is just below the 200 period moving average. What can we get?
I like cross comparison. Absolutely.
All right. So there we can get $125. And again, that's just below the 200 period moving average. What is the margin on that? Or not the margin, the requirement on that? 250. So 125 from 250, or 2,500, excuse me, you're looking at 5% return on investment. So if you're happy with it at
You know,
25,
Cody,
below the 200.
I do this calculation on every strike price every month. There's not been a month I haven't had a naked put on Mara. There will not be a month I ever don't have a naked put on Mara, unless they do something stupid and management pisses me off. So.
Yeah, definitely. If they do that and they piss you off, then get out. But if you did do the margin and wanted to look at it a little sexy again, you got to make sure you manage it well, and you understand that you might have to put up the full $2,500. If you did it on margin, you're looking at 33% return on investment. So
Right.
Either way, either 5%. If you have to take ownership, it's still a good return. If you have to do the full cash price of the option, that's okay. 5% return on investment, not too bad.
All right. So because literally Mara, I bet you I know more about Mara than anybody in the freaking world, because I have no life and I can sit around for hours just thinking about this company. One thing that on the technicals that I would advise in the future, never do technicals on Mara. They're irrelevant. You do the technicals on Bitcoin. Will you give me /BTC, Greg? Because it doesn't matter what Mara does. Mara can be spooked by the market. It can be this and that. It doesn't matter. It's going to follow Bitcoin. It is a 100% Bitcoin mining company. It's a store of value. They've invested more. I mean, it is Bitcoin. If Bitcoin goes to 10,000, Mara is going to 3. If Bitcoin goes to 100,000, Mara is going to 100. It's pretty much that simple. It is. So it does not matter what the technicals on Mara are. They really don't. It matters what the technicals are. Bitcoin on. I like how market's been freaking out. Bitcoin hasn't done anything the last couple of days, has it? Right. I like that relative strength. I like how Bitcoin's behaving right now. But so I would always do my, like on Riot and Mara, I'd always do my technicals on Bitcoin, because that's all that matters. And I like that technical setup lots better than I do the Mara setup. So
fair enough.
Which one are you going to do, sir?
Wait, do I get my joke now? I had to look up.
Well, I want to know if you're going to do the 20 or the 25.
I'm probably going to do the 20. I'm more of a conservative trader.
And there's nothing wrong with that,
And so I'm probably going to do the 20, because like I said, on the Mara, if it were to drop back down to that 20, I wouldn't mind having to pick it up down there. And as you pointed out, this follows Bitcoin, and I don't think that Bitcoin's going to drop that much without people, immediately being like, it's a buying opportunity, go, go, go.
Yeah, I listen.
So,
go ahead.
Sorry, go ahead. I was just saying, so you want to know why I got the old money homes moniker? Because as soon as I saw Marathon, you know what I was thinking? Marathon oil.
Yeah, Marathon oil.
And then you said, oh, it's a Bitcoin product. I'm like, that's why I don't know what it is. So that's how I got the name right there. That explains it all. But anyway, carry on.
I love this company. This company has treated me like ridiculously well. And I focus primarily on cash flow. Have a little directional exposure, but primarily in cash flow. I get put shares all the time. I sell calls against them. I get called out. I then rinse and repeat. Because if you look at this company from a directional standpoint, find me an entry that works over the last 6 months, right? You're not going to find one. It's a mess. But from like aggressive cash flow, I just cash flow this company. If I get put the shares, I cash flow some more. And if I get called out, I give up directional dreams. And this thing is a golden child, in my opinion. But Cody, you knew that. You knew you sucked up. Suck up. Make me laugh now. Make me laugh.
All right. Wife steps out of the shower, winks at her husband, and says, I shaved for you. You know what that means? Husband says, yeah, it means the drain's clogged again.
Nice.
I've really enjoyed these jokes. Like, seriously. Greg.
All right.
Well, we had young money Mackie. Now give me some old money homes.
Yeah, well, I don't have anything to do with Bitcoin, but
I didn't even ask you your opinion on that one, Greg.
for a good reason.
For a good reason.
All right. Well, you know what? I've been wanting to short this for so long, and I think it's time. Boeing.
Oh, I got to break out my short analysis.
Yeah, I'm looking at this big old M pattern right here. Right about here down to here, very aggressive to the downside. this company just bothers me to no end, much like almost every aerospace company or airline for that matter. But again, just my own bugaboos. But I just think this setup's fantastic here. I think this thing's going to tank. You could play it directionally. I'm not even playing it directionally this time around. I just think that this thing's going to break down. That it would be a trigger here. I might even trigger below the low of this candle here, which is 217. Trigger below that. The trade I like here is actually a bear call spread. Let's make sure I got this. Sorry, I apologize. I'm talking about the wrong thing here. This one I have a bear put spread, not a bear call spread. So this one I am playing directionally, by the way. I got another one that's got similar letters. Sorry about that. Anyway, so the break below here, 217. I think if we get a double bottom, it's going to be around the 205 range there. So just your garden variety bear put here. Again, we're seeing weakness here. Now, could you be excused for this thing going down 5 days in a row? Say it's overextended? Yes. What would be ideal here? A few days sideways before it tanks. Again, you're not going to get into this trade unless you're below here. So the trade I like going out to October for our bear put, I like the 220. So buying the 220 and selling the 205. So your cost base is about $600 here. We look at our risk reward, go to the analyze tab here, get rid of a bunch of stuff that I already have on there. So risking, if you do nothing, you're risking 605 to make 895. I don't really like that myself. I want to have a stop loss in play here, which I think is always a wise idea. You can see that I've drawn a line here of where I like this. So that would be above the 200 moving average there. So anywhere around the 227.
And that stop loss will coincide in the next day or two with the falling 9 EMA too. Then falling 9 will be right there in the next day or two.
Correct. And even if it took a few days, then you've got this falling 20 coming its way as well. So
joining the party as well.
That's right. So if we look at this here and you get out at 227, you're looking at $1.40 to make a potential 900. So the risk reward on this is fantastic.
I mean, as someone who doesn't do bearish trades, I got to appreciate. I mean, we go back to that because that's a huge selling point where, all right, let's say I have a bunch of cyclical exposure, and right, Boeing doesn't give me one-to-one, protection against other stuff I have, right? Though, but stocks tend to trend together in areas. So if my stop loss is $1.40 and I can make 800,
895,
almost 900 at the top.
Yeah, you're looking was that like 4-to-1, 5-to-1, something like that? It's pretty solid.
I mean, that is just attractive.
Well, and the other part of that is look where it took 2 days for this thing to get 2 sessions to get from 205 to 218. So it's not like you're asking this thing to go to the pits of Haiti. You're just asking this for a little tiny move to get there. And obviously you need to do that at expiration to get the full boat. But even if you don't get the full boat, you still making, $300 and risking a 140. So you're still over 2-to-1, even if that happened tomorrow, and every day that goes by, it gets better, right? So you've got a real good potential here if this thing decides to crater.
How do you think, Cody? You do a lot more bearish trades than I do. And you're on mute, sir.
I'm muted. Sorry about that. I know I actually really do like this pattern as well. The first thing after Greg pointed out the M is that location of the support that the bottom part of the M is on was the first thing that I saw. Now that M formation, I'm usually a little timid to get into them, and I'm usually quick to get in and out, which I liked how Greg was like, we're not asking for very much. Just because this is similar to, like, say a breakout. When the stock runs up to the breakout, it usually doesn't run too much past that, and the M pattern is kind of the bearish form of that, where it kind of runs down to that stop point. But that being the major level support, I mean, bears take the elevator, bulls take the stairs, and this could, if it were to break that level, I think the piling on and going short could be a quick, easy trade. And I think that, I mean, even with this being an expensive company, I'd probably do a stock on this, and then just maybe even pick up 4 or 5 shares, 10 shares, depending on the size of your account, and trail that stop day after day. So I'd kind of momentum trade this to the downside to pick up that quick win. That's the way I would trade this.
And I've seen a variation of this pattern all over the market, not exactly the M. But about a week ago, about a week and a half ago, things tried to make a run. They had the little lift, and then the bottom just fell out. You had so many false signals across the board. I got caught on a naked put on charge point that I'm happy to take ownership on. These signals were being generated. I took a few of them. False flag, they just collapsed on themselves. And so there's some weakness out there, right? And it's starting to bleed over into the real market. I think you have to have an open-minded, especially when you can make risk reward work on some of these bearish trades, that if the market goes haywire, right? Well, I got some bearish exposure that I have good risk reward. I'm not adding a ton to a trade. Like if I was buy a straight protective put on a company to this or that. Will you highlight the price action from mid-June to mid-July for me on Boeing? Just highlight in on that, because the one thing, there could be a couple setups here for this trade coming in. We see that in mid-June, we start this slide, and then at the start of July, we have this little reflexive rally, right? That gets slapped down by the falling moving averages, which unless you got real strengths, real easy to do. And when it got slapped down by that falling 20, momentum got crushed. And so I could see a couple scenarios playing out here, right? I mean, you could just crater, right? You could just crater, triggers in. You could trade sideways, which I think everyone would prefer, and then trigger in. But if you get a little reflexive rally because of whatever nonsense happens, you get those falling moving average to slap down, that would be a trigger I'd be really interested in. So I think this is one of those that no matter what kind of entry you like as a trader, you can map out. And the risk reward is going to be relatively the same, right? I'm going to have a stop loss. It's going to vary here or there depending on where I get in. It's a good way to take some bearish exposure. And I would advocate traders to go find maybe a few more plays like this out there on companies. And maybe go find one in tech, or maybe find one in a Boeing setup. Just find something that have some good risk reward, that if the market spins out of control, you can make some money, maybe offset some of your bullish positions. I don't think we need any more jokes. I've laughed hard at both jokes tonight. I've thought they were both really good jokes. But you know what? When I'm winning, I like to push it. Listen, I will never leave at the top of the money I make. No, I'll always give a little back. So let's push it. I want to hear another joke.
All right. I had my phone in my hand the other day, and I said, Siri, why am I single? Siri activates the front camera.
Listen, you're both winners in my book tonight. All right, we got a couple financials, different way to play, very creative. Boeing, pretty straightforward actually, but classic way to play. Cody and I both presenting you Mara, Marathon Digital. Cody, last pick.
So majority of my picks were all financial, but I think we're all in agreement on financial. So I'll try to branch out to one of the other 2 sectors that I think are doing all right. Utilities have been going crazy. That's not utilities, that's utilities. They've just been going up. They had a nice breakout. Had a few plays on there, but utilities don't tend to run this much, so I don't know how much we're going to have in there. The other one I kind of liked was real estate. And real estate, whereas the rest of the market kind of, has been up and up and up, I like this base that we're seeing that Greg's already got highlighted on there. And even yesterday when the markets were beat up a little bit, it did get caught up in today's selling, but yesterday it didn't. So that, to me, that shows a little bit of strength in the market. So within real estate, I'm looking at some of the builders, because what does everyone have to do? So I'm going to look at BLDR. So this is a building supply company. So based on the fact that from real estate needs, we actually have an we have an undersupply of houses to the growth of our population here. So I do believe that even though rent houses and all the different things going on there, we're still going to need to build more houses over time. So I do believe that in the long term. From there, I like this chart set up on this one. It had a good earnings, it popped up, ran up after that, and now we're kind of getting a pullback back into that 9. So we have that move, and that line, again, similar to the previous one I looked at, right around $50. So the way I would look to do this is very similar to what Greg had said to do on the other one, is I would be looking to leg into this particular trade. I'd look for my first trigger to be above today's candle, which is a doji. This one did stay a doji, thank God, that I could get my initial entry there. And I'm going to do a straight stock play with this one, no options needed. And at a $50 to get into that to begin with, not too expensive. And then the next time I'd be looking to add in would be above 52. Maybe a little bit 53, 52, 50, somewhere around there is where I'd be looking to add in to that trade. And then from there, I'm looking at my overall target would be upwards of actually probably closer to 55, 57 or so would where if I get both legs into that, and if I can get a full position and get up to 57, 50, I'd be a happy camper, because now we're pushing out to all-time highs. And what I also like on this is if we can break above that, then we got clear skies. So a little bit more conservative trade, nothing fancy, nothing, we're not going to the moon or anything on this one. That's another reason I'm just doing a straight stock play, is I like the what not just this company's pattern looks like and how they performed after earnings, but I like that the overall real estate sector, if we can break out on that as well, to be an additional indicator that the real estate sector is moving, then that could also help to add to this particular trade.
One problem with that is that Builder's not part of the XLRE.
They're not part of it, but they're in conjunction. It's like the rubber band.
The XLRE is mostly made up of REITs. This is more of a cyclical play than a defensive play in REITs. So, it's looking at the home builders ETF.
Okay.
Would be probably a more appropriate, and Greg pointed that out. So.
And those two charts look very similar to each other. I still like the pattern that we have here, though. It's a bull flag on the builders.
I mean, respond positive. I mean, what do you think, Greg?
Yeah, it's my only bugaboo is, and I know real estate's not exactly tied to the builders. I don't mind the builders trade. Like it's a nice little bullish retracement there. Again, I think you have to leg in here. Just because again the risk reward is not quite there for me. What's the ATR on this $1.68? So yeah, you're just not right there for me. I think actually even waiting for the break here would be actually fantastic, and I like it that way because of the weekly chart. So look what's happened here. This thing ran up to 54, came down, making a nice rounding bottom. Now it's pulling back once more. If it holds support here and makes a little handle here, well, now you've got a textbook cup and handle, and then the breakout at 54 would be fantastic. So if you wanted to be a little bit more patient, then I think there's still a trade here. If you want to be a little more aggressive and kind of leg into a stock trade here, I wouldn't personally have a problem with that. The home builders, as I pulled up there, it looks like it's trying to find some support there. Doji candle today, bull flag, there's potential there too. So not too bad as far as I'm concerned. Like I said, you can play it a couple of ways to reduce your risk. And the way to do that, I think, would be to leg in if you're going to get involved in this trade. Either that or put it on a watch list, wait for that cup and handle to form. Like you can see it on the daily. It looks really good on the weekly, but on the daily, you got a giant cup here. Maybe it's making a handle here and taking another run. And I'd be on board for that next run.
Yeah, and I was studying because I was like, I don't know this company as well as others. The base of it, I know they killed it on earnings. And I like to know a stock's personality. I don't have a lot of examples of when Builder has went up 300%, dipped down, and then formed this pattern. In fact, it's never done this before. And so I don't have what's this stock's personality? Like Microsoft, I know it's there's no precedent for it. And so I always when I can't put it in a box, I'm always, And if you have a put it in the box joke, Cody, I'm just going to give you the title tonight. So it's just, there's something I just uneasy about it. There's something about easy. I'm shying away from cyclicals right now. I'd rather go to the banks a million times over right now.
There are plenty. Bank of America, Capital One, all of them looks fantastic. I just didn't want to pile on with nothing.
I know Frank would like this chart in some form or another, but it seems like one of those small edge trading. Like take stop loss. If you get a hit, you get a hit. It seems very much a trader's chart. Which is probably why I'm not, because I'm
too fond of it.
I'm an old stodgy investor. So.
All
that
right.
likes to play Nick and puts on Mara. I don't know what I am anymore.
Let's see if I can get you to laugh with my joke. So I had to go get a prostate exam, and the doctor comes in and he says, okay, take your pants off and bend over the table. And I said, okay, where to put my pants? And he says, right over there next to mine. That wasn't the answer I was looking for.
Listen, you had to put it in the box joke. What can I say?
Yeah, you did. I didn't see him going there. That's a different box than I was thinking.
Mike, listen, this is why when you're at the craps table and you're rolling dice and you hit a couple, you just keep rolling. Listen, you don't walk away with your money until you give up a little bit, because that's what the jokes are tonight, man. We keep rolling sevens on the come out. Greg closes out tonight. What's your last pick?
All right. Well, one of the things that was actually green, which you guys know I hate, but it was actually green today.
It was. There were a lot of sneaky greens today.
Yeah.
There were a lot of sneaky greens today.
And anybody who knows me knows that Netflix is not usually on my radar. But a good pattern's a good pattern. Classic W, just like the M we found. Look at this W. Like, if that's not hardcore, I don't know what is.
It's hard to ignore.
It's textbook, right? We're above all the moving averages. The other part that I like about this most, and I don't know if you guys look at this the same way I do, when you get all of these, look at these moving averages. Look how they're all coiled together. Typically, when you get moving averages that come together, you tend to get a pretty good move away from there. And as far as I'm concerned, this candle here is not the big move I'm expecting. I'm expecting much more than that. So you've got a breakout level here at 527. You've got nothing but free air. If you look how this went down, you got nothing but free air all the way up to 555 there. So you've got a lot of room to run there. This is strictly a directional trade. There's no cash flow involved here. I don't really even tend to do credit spreads on Netflix. I usually try and take it diagonal or directionally because it tends to move. So for me, it's going to be your straight bull call. The trade I like the most is the October. I'm going a little bit out of the money because this is expensive, right? You're going to see these options are not cheap, right? So I'm going to buy the 525, and I'm not going to go all the way to, I looked at going all the way to 555, which is what I usually do, because I like to put my short leg where I think the stock is going to go. The problem with this is the cost, right? The cost is prohibitive. So normally I would run this to 555. For me, this trade at, $1,000 doesn't bother me at all. Obviously I'd have a stop loss below all these moving averages at say 515, maybe 510. So you would offset some of this risk. But what I'd rather do instead is go to the 540, make this a more reasonable trade at 600.
Oh.
And then if we look at this, right, this allows more folks to get in. And if we take a little look see at this bad boy here, you've got your 593 to make almost 1,000. So you're not quite 2 to 1, but again, like I said, my stop loss is going to be somewhere around 510, right? So I'm risking about $120 for another potential 900. So I've built myself out a trade here where I've got a really good risk reward. I've got a beautiful technical setup, and now all I got to do is wait for this to bust out. You could wait to get above this, which is 526.84. Again, I would just get in once this gets above 527 is where I would enter this trade. But I think it's fantastic. It's got lots of energy left. Like I said, those moving averages, think of it like a coiled spring. When you push that thing down, it's gonna explode. And when it does, you just ride the wave. So,
This is my favorite trade of the night. We're just talking about stock's personality. I mean, we're in this 14-month consolidation pattern on Netflix, right? Directional trader's nightmare every time you try. But in this broad consolidation pattern, Netflix will form smaller consolidation patterns at different points, sometimes at the bottom, sometimes in the middle. Those tight compression patterns like it's done over the last, what is it, month and a half? And the personality, you break out of those have produced some nice short-term burst. Those have, produced some nice short-term burst where, after a week or two, I can hey, I'm going to sell the rip, take some profit. But they have produced those bursts along the way in this 14 months. Little tight consolidation, clear entry signals. And that's another thing that's pretty consistent in this personality of Netflix is that the ranges are pretty easy to identify. You don't have to, dissect it and be like guesswork. It's pretty clean signal. I like a short burst here. I like a variety of plays here. Taking profit, after a little sell the rip. In a trend, and one of my favorite things about Netflix always is I know it's indexes and the market sells off, blah, blah, blah. Index has its own personality, always has. It doesn't have the same personality it did, 2, 3, 4, 5 years ago, where it didn't matter what the market was going to do and Netflix was going to do. It still has a little bit of that spunk rebel to it, where it can counter trend with the market. I think that is a huge plus in this market. Clean trigger. I like the risk reward there. I like when you brought down the bull call to make it,
reasonable.
just in case. Yeah. So, long on Netflix, short on Boeing.
Two of my favorite things.
Wow.
All right.
Listen, I am not afraid to roll the dice. Let's do this. Let's call this good. Bring me some drinks, some music, and give me another 7, Greg.
All right. My wife asked me to sink her phone, so I threw it into the ocean. I still don't know why she's mad at me.
Okay, seeing it took me a second. That's not bad. Listen, that is not the ace quality, but we didn't roll a craps. We rolled a 6, and I didn't have any chips on the 6. I had them all on the 8 and the 5. So, but I didn't lose any money either. I didn't lose any money either. Cody, so who should win tonight?
Honestly, I think Greg got me. I mean, that I don't usually do bull call spreads, but I just mapped it out the way that I normally do it with buying the call and then spreading it out afterwards and legging into the spread overall. And it doesn't work my way, but it works Greg's way with that, risking $120 to make roughly 900. That works out. Whereas the way that I was looking to do it, legging in afterwards, if I had to take the stop loss at 510, I'm risking $500, risking a lot more in order to get into there. And then the leg after the fact, I'd only be making 1,500 or so. So he's actually convinced me this is a better ROI doing it through the bull call spread. So it's been a long time since I've put on just a straight bull call spread, but Greg, you might have convinced me there.
It's been a long time since I've put on a straight bull call spread because, I'm always a cash flowy kind of guy. I'm going to give this a hard look because I really like this trade. Clean trigger, fits the stocks person. And I have a lot of like those airlines and cruise ships and all that. Let's say we get some terrible COVID news. We know Netflix, there's still a little algorithm and juice in the COVID up, stay at home stock. I've seen a little, not like you did last year, nowhere close to that, a little bit of that juice as well. A lot of things I like about that, Greg. So are you declaring Greg the winner, Cody? Is that what I'm hearing?
Yeah, if we have to watch this one of mine, look for that cup and handle. We didn't have to watch list any of his. I'll say Greg definitely got me this time.
I know. So
but Emily is going to be harder for you.
Hey, I still haven't had my head chopped off by the queen, so I'll step up. I'm okay with that.
Those were the funniest jokes you brought me ever, Cody. Like I liked it. So listen, the next time you're on, young man, you are not allowed to spend 1 minute researching jokes.
just grab them.
Just show up. Yeah.
What strikes you? We don't want to overthink as traders. We want to see something good. All right, that's let's do that, right? So all right, Greg, give us some final thoughts as we head into the evening.
Yeah, markets are wicked out there right now, but I think, Mark, you said it best. buy the dip crowd is still there. Let's see if they come back for another round and take advantage of the opportunities, because there's lots. Cody had some nice pullbacks tonight. We're just waiting for those to confirm, and there's going to be opportunities. So get out there and take advantage of them.
All right, everyone have a wonderful night. Greg's going to be on 30 Minutes, Mind of the Trader, where he does his, Q&A at night. Share more of his thoughts. If you have any questions at all, Pro members, go to the events calendars to access that show. But that will start in 34 minutes. 34 minutes. Everyone have a wonderful, wonderful, wonderful night. And email us at team@tackletrading